Hold on tight, folks. $7 trillion in market value vaporized in just 48 hours. That's right, trillions gone poof, like smoke in the wind, as stocks, crypto, gold, and silver got absolutely obliterated on Monday. If you woke up to red screens everywhere, your portfolio bleeding out, I feel you. This hurts bad. But listen up, because this crash isn't the end. It's the spark for something massive. Is this the death of the bull run, or the setup for the biggest short squeeze you've ever seen in your life? Stick with me, because I'm breaking it all down. The why, the how, and most importantly, how you, the retail warrior, come out on top while the big boys sweat. Let's dive in. First off, what the heck just happened? Boom. The Dow plunged 5% in a single session. Nasdaq tech stocks got wrecked by 7%. Bitcoin dumped 15% overnight. Gold slid 9%. And silver? Oh man, silver got crushed 28% like a bug under a boot. We're talking $7 trillion wiped from global markets faster than you can say margin call. If you bought the top last week, you're hurting right now. Thoughts and prayers, my friend. But this is not random. This is engineered pain to shake out the weak hands. So, why the bloodbath? Let's keep it simple. Number one, the dollar's on steroids. The DXY spiked 3% in days, hitting 108. That's the dollar index, folks, the kingpin of currencies. Think of it like a massive seesaw. When the dollar shoots up, everything priced in dollars gets slammed down hard. Gold, silver, crypto, they're all getting crushed under that weight. Why the dollar pump? Fed signals turned hawkish as hell. Jerome Powell dropped hints in his latest speech about holding rates high longer than expected, no cuts coming soon. Inflation's ticking up again thanks to supply chain snarls from Middle East chaos, so the Fed's like, nah, we're not easing yet. Bam, bond yields jump, dollar surges, and assets priced against it tank. Then there's profit taking after that parabolic run. Remember, gold hit all-time highs at $2,800 an ounce just last month. Silver blasted to $40. Everyone was piling in, leveraged to the gills. But when the first crack shows, dominoes fall. Margin calls cascade like a wildfire. Traders with 10x, 20x leverage get liquidated in minutes. Billions in positions forced sold, feeding the dump. And don't get me started on the tech sell-off. AI stocks like Nvidia and Tesla, down 10-12% as big funds rotate out, locking in gains before the storm. Add in Trump's latest picks for Treasury, super pro-business, but rattling markets with tariff talks, and you've got a perfect storm. This silent bank run, yeah, whispers of depositors pulling cash from smaller banks amid the volatility, echoing 2023's SVB nightmare. They're not telling you, but liquidity's drying up fast. But here's where it gets conspiratorial. You are the exit liquidity. The whales, the institutions, they've been stacking quietly while retail panics. They dump on you at the highs, buy back cheap when you're forced out. This isn't fair, it's rigged, but knowledge is your weapon. We've all been there. I lost big in the 2022 crypto winter, felt that gut punch. It hurts, but it builds you stronger. Now, let's zoom out. This exact same thing happened in March 2020. Remember the COVID crash? Markets nuked 30-40% in weeks. Gold dipped 15%. Silver got hammered 35%. Everyone screamed, end of the world. Then, it exploded 200% higher in months as stimulus flooded in. Or take October 2022. Fed hikes crushed everything. Silver down 25%. Then bam, 80% rally in the next year. History rhymes, folks. These dips are fake outs to steal your stack before the real moonshot. And the long term? Oh, it's so bullish it hurts. Central banks are stacking gold like never before. Record 1,200 tons bought last year alone. China and Russia leading the charge in de-dollarization. That's unstoppable. The dollar's dominance cracking under BRICS expansion. Silver? Chronic deficits, folks. We're mining less than we use with AI, solar panels, and EVs gobbling it up. Demand exploding 20-30% yearly, supply flatlining. Gold's the same. Industrial boom from green energy, plus geopolitical chaos, wars, elections, you name it, driving safe haven buys. Crypto? Bitcoin halvings baked in, ETFs sucking up supply. Stocks? Tech fundamentals solid. AI isn't hype, it's trillions in future profits. This crash? Just noise. The bull thesis is ironclad. All right, probability time. My gut feel based on charts and flows. 65% chance we rally hard next month. Shorts get squeezed as dip buyers flood in, pushing us back to highs. 25% more pain to shake weak hands. Maybe another 5-10% down if DXY holds strong. 10% sideways chop, grinding sideways to bore you out. But mark my words, the upside wins. And my bold call? By mid-February, gold smashes back above $2,700. That's right, reclaiming highs and then some as dollar weakens on any Fed pivot hint. Silver? It'll rocket to $35 easy. Don't sleep on this. Screenshot it, tag me when it hits. So, what do you do now? Empower yourself, Retail King. Ditch leverage now. No more gambling with borrowed money. That's how they wreck you. Stack physical if you can. Gold bars, silver coins. Hold them tight through the storm. Buy the dip smart, not all at once. Dollar cost averaging over the next week. Watch key indicators closely. DXY for dollar moves. Fed minutes dropping soon. China data on metals demand. And crypto? If Bitcoin holds 80K, load up. It's the digital gold play. Whoa, hold everything. $7 trillion in market value just got obliterated in a single brutal session. That's right, folks. Trillions vanished faster than you can refresh your trading app, as gold, silver, stocks, crypto, everything got absolutely demolished in one of the most violent liquidations we've seen in decades. Gold plunged 9% from its all-time high above $5,600 an ounce, straight down to around $4,900. Silver? It got crushed even harder, slamming 26 to 35% in hours, wiping out massive chunks of its parabolic run from 120 plus its peaks. Bitcoin dumped hard too, sliding from recent highs toward 80K territory, while broader markets felt the shockwaves with tech and small caps reeling. If you opened your portfolio this morning and saw nothing but blood-red screens staring back at you, your gains evaporating, your stops getting hunted, your margin calls lighting up like fireworks, I know it hurts. Deeply. We've all been there. That gut-wrenching feeling when what looked like unstoppable momentum turns into a free fall, when the euphoria flips to pure panic, and you're left wondering if this is the big one, the crash that ends it all. Thoughts and prayers don't even begin to cover it right now. You're not alone in this pain. Millions of retail warriors just like you are staring at the same nightmare, questioning every decision, every buy, every hold. If you chased the top last week, piled in on FOMO when gold was blasting to $500-600 and silver was mooning past $120, you're hurting bad today, real bad. The kind of hurt that makes you want to throw your phone across the room or just log off forever. And yeah, it feels personal, like the market reached in and punched you square in the chest. But listen close, because this isn't random cruelty. This is not some freak accident. This is the system doing exactly what it's designed to do. Shake out the weak hands, flush the overleveraged dreamers, and hand the cheap tickets to the patient ones who survive the storm. You are the exit liquidity right now. The big players, the institutions, the whales who've been quietly accumulating while retail piled in at the highs. They let the hype build, let the leverage stack sky high, then bam, a trigger hits and the cascade begins. Margin calls fire like dominoes toppling one after another. Forced selling begets more forced selling. Liquidations snowball into an avalanche, wiping billions in seconds. And who gets wrecked? The little guy holding on with 10x, 20x borrowed money, dreaming of Lambos while the pros lock in profits and reload lower. It's brutal, it's unfair, and it stings like hell. But here's the raw truth you need to hear through the noise. This pain, it's temporary, this crash, it's the purge before the real explosion. We've seen this movie before. Remember March 2020? Markets nuked 30-40%, gold dipped hard, silver got absolutely demolished. Everyone screamed apocalypse. Then what? Central banks flooded the system and assets rocketed 200% plus in the recovery. Or 2022, when Fed hikes crushed everything, silver down 25% plus, crypto in the gutter, felt like the end. Then the bounce came roaring back. History doesn't repeat by accident. It rhymes because human greed, fear, and leverage behave the same way every cycle. Right now, you're in the fear phase, the part where weak hands get shaken out violently so strong hands can load up cheap. The dollar's ripping higher, DXY spiking to the 97 handle after that Kevin Warsh Fed chair nomination news sent shockwaves through everything dollar priced. Think of it like a giant seesaw. Dollar up means gold, silver, crypto down hard because they're all fighting that headwind. Add in profit taking after insane rallies. Gold up 65% last year, silver 145%, and leveraged positions getting torched. It's a perfect storm engineered to test your resolve. But you're still here, watching this, fighting through the red. That means you're tougher than most. You've felt the burn before and come back stronger. This dip isn't destroying your future. It's handing you the opportunity of a lifetime if you keep your head. And the long-term story hasn't changed one bit. Central banks are still stacking gold at record paces. Silver's in chronic deficit with AI, solar, EVs devouring supply. De-dollarization is accelerating. Geopolitical chaos keeps safe haven demand alive. This crash is just noise, violent, scary noise, but noise nonetheless. The bull case is ironclad, unbreakable. So yeah, it hurts right now. Your portfolio's on fire, your confidence is shaken, and the voices in your head are screaming, sell it all, but don't. Breathe. This is the moment that separates survivors from casualties. The weak hands are folding. Don't be one of them. Hold tight. Stack more if you can afford it. Average and smart. Because when this storm clears, and it will clear faster than you think. The rebound is going to be ferocious. The shorts will get squeezed into oblivion, the dip buyers will flood in, and those who endured the pain will be the ones laughing all the way to new highs. You're not a victim here. You're the retail warrior built for this exact chaos. This crash didn't break you. It's forging you. Hang in there. The biggest wins come after the deepest pain. Let's turn this bloodbath into your comeback story. So why the bloodbath right now? Let's rip the Band-Aid off and expose it plain and simple, no sugarcoating. This isn't some mysterious black swan event dropping out of nowhere. This is the dollar turning into a wrecking ball, smashing everything in its path. The DXY, that's the dollar index, the heavyweight champ of currencies, just spiked hard, ripping from the mid-96 up toward 97.5 plus in a flash. Think of it like a brutal seesaw in a playground fight. When one side, the dollar, shoots sky high, everything else priced in dollars gets crushed flat on the ground. Gold, silver, Bitcoin, even stocks with global exposure. They're all fighting that relentless headwind. And why is the dollar pumping like this? Because the Fed just flipped the script on everyone. Jerome Powell and crew have been hinting at staying hawkish longer than the market priced in. No aggressive rate cuts coming soon, inflation ticking stubborn, supply chains still snarled from geopolitical mess. Then boom, Trump nominates Kevin Warsh as the next Fed chair, a guy known for tough, no-nonsense policy. Markets freak, higher for longer. Bond yields jump, dollar surges, and the risk-off avalanche kicks in. But it gets deeper. Profit-taking after that insane parabolic run we just had. Gold blasted to over $5,600 an ounce in late January, up massive percentages in months. Silver? It mooned past $120, insane gains. Everyone and their brother piled in, FOMO everywhere, leverage stacked to the ceiling, 10x, 20x, even higher on futures and options. Then the first crack appears and it's game over. Margin calls hit like lightning strikes. One trader gets liquidated, forced to sell at any price, which triggers the next guy's call, and the next. Liquidations cascade into a full-blown waterfall. Billions in positions dumped in minutes, feeding the panic lower. Tech stocks? Nvidia, Tesla, the AI darlings? They got hit hard too, down 10% plus in sessions as big funds rotate out, locking profits before the storm fully hits. Tariff talks from Trump's picks rattle nerves again, whispering trade wars, and whispers of a silent bank run. Yeah, smaller banks seeing outflows as volatility spikes, echoing SVB vibes from years back. Liquidity dries up fast when fear rules. Now, here's the conspiratorial gut punch you need to feel. You, the retail investor, are straight up exit liquidity. The whales, institutions, hedge funds, central banks quietly stacking, they've been letting the hype build. They ride the wave up while retail chases highs on margin. Then they trigger the dump, or just let the catalysts do it, and scoop up the cheap shares, coins, bars at fire sale prices while you're forced out bleeding. It's not fair. It's rigged in their favor. They laugh while you bleed red on your screen. This crash is designed to shake out the weak hands, the over-leveraged gamblers who bought the narrative without steel in their spine. The system thrives on this fear-greed cycle. They need your panic to buy low. But don't despair. History screams that this is the setup, not the funeral. This exact pattern has played out before, and every time it ends the same way. Massive pain, then explosive upside. Go back to March 2020. COVID crash nuked markets 30-40% in weeks. Gold dipped 15%, silver got demolished, 35% plus. Panic everywhere. The bull is dead. Then central banks unleashed trillions in stimulus, and what happened? Gold rocketed over 100% higher in the next year. Silver exploded even more. Or October 2022. Fed hikes crushed everything. Silver down 25% plus. Crypto winter brutal. Stocks bleeding. Felt apocalyptic. Then the rebound. Silver up 80% plus in the following stretch. Bitcoin from lows to new highs. Even 2018's crypto carnage after the 2017 bubble, brutal 80% plus drops, led to the 2020-2021 moonshot. Why does it rhyme? Because human nature doesn't change. Greed inflates bubbles, fear pops them, leverage amplifies the pain, but fundamentals win long term. Right now, you're in the fear capitulation phase, the violent shakeout where weak hands fold, so strong hands load up. The dollar spike is temporary pressure. Any hint of Fed pivot or cooling inflation flips it fast. Geopolitical chaos, Middle East tensions, BRICS moves, keeps safe haven demand simmering. This isn't the end of the bull. It's the violent reset before the next leg up. The big players know it. They're accumulating while retail panics. Don't be the one who sells at the bottom and watches from the sidelines as it rips higher. This crash hurts. I get it. We've all stared at those red numbers wondering if it's over. But it's not. It's the forge, the purge, the moment that builds unbreakable conviction. The whales want your fear. Starve them of it. Hold through the noise because history shows the rebound after these engineered dips is ferocious. Shorts get squeezed to death, dip buyers flood in, and the cycle repeats. Higher highs await those who survive. This is how fortunes are made, not in the euphoria, but in the blood-soaked trenches when everyone else quits. Stay sharp, stay stacked. The real move is coming. The long-term fundamentals, oh man, they're so bullish it almost feels unfair to the bears still clinging to their short positions. This crash we're in right now, this violent dip, this red screen apocalypse, it's just temporary noise. Scratchy static on a radio that's about to blast crystal clear victory music. The real story hasn't budged 1 inch. Central banks are still hoarding gold like it's the last lifeboat on a sinking ship. In 2025 alone, they scooped up around 863 tons. That's right, hundreds of tons even as prices soared past $4,000, $5,000, and higher. We're talking record after record with emerging giants like China, Poland, and Russia leading the charge in de-dollarization. They don't care about short-term volatility. They're building reserves against a world where the dollar's throne is cracking. BRICS expansion, trade wars brewing, geopolitical fires everywhere. It's all accelerating the shift away from fiat dominance. Gold isn't just a safe haven anymore. It's strategic armor for nations waking up to multipolar reality. And the demand? Exploding. Industrial use in green tech, electronics, you name it. But central banks are the big quiet buyers stacking relentlessly. Then there's silver, the real sleeper that's about to wake up roaring. Chronic structural deficits for 5 straight years running, and 2026 looks no different. We're talking production flatlining while demand from solar panels, EVs, AI data centers, semiconductors, 5G, and electrification devours every ounce mined. Solar alone chews through massive amounts for photovoltaics. And with global energy transition ramping hard, plus AI's insatiable hunger for power-hungry infrastructure, silver's getting vacuumed up faster than miners can dig. Supply's inelastic. Most silver's a byproduct of other metals, so higher prices don't magically flood the market. Inventories tightening, COMEX outflows, physical premiums spiking in Asia. This is real scarcity, not paper games. Silver's up huge year over year, but the fundamentals scream a multi-year bull supercycle. The crash just handed dip buyers a gift-wrapped discount on an asset that's fundamentally starved. Gold's the same story amplified. Prices have been on a tear, hitting all-time highs north of 5,000 plus before this pullback, but the drivers are ironclad. Geopolitical chaos keeps safe haven bids alive. Inflation fears linger under the surface. Real yields might spike short-term with dollar strength, but any Fed pivot or cooling data flips that switch fast. And don't sleep on crypto. Bitcoin's the digital gold play here. Even after dipping below 80 kept on in this mess, the halvings, ETF inflows, institutional adoption, it's baked in for explosive legs higher once fear subsides. This crash? Pure noise. A violent reset engineered to test conviction. The bull thesis is unbreakable. Supply constraints meet exploding demand in a world de-risking from dollar hegemony. Central bank stacking, industrial black holes in silver, safe haven frenzy in gold, digital scarcity in Bitcoin. It's all converging. The dip isn't killing the rally, it's fertilizing the next parabolic phase. All right, probability breakdown time, straight from the gut, charts, and flows. 65% we rally hard next month. Shorts capitulate. Dip buyers pile in aggressively. Dollar eases on any soft data or Fed whisper, pushing us back toward highs and beyond. 25% more pain ahead to really shake weak hands. Another 5 to 10% leg down if DXY holds firm and margin calls keep cascading. 10% sideways chop, grinding to bore out the impatient. But upside dominates. The math favors the bulls big time. My bold, specific prediction? By mid-February, that's right, in the next couple weeks from this bloodbath, gold smashes back above $5,000 easy, reclaiming momentum and eyeing 5,500 plusers as the dollar cools. Silver? It'll rocket toward $90 or $100, squeezing the life out of shorts who thought the deficit was a myth. Bitcoin holds 75K support and blasts toward 90K plus. Screenshot this call right now and tag me when it prints. This is the kind of setup where legends are made. So what do? Empower yourself, retail king. Don't let the pain turn you into exit liquidity. Ditch leverage now. No more 10x, 20x gambling. That's how they wreck you in cascades. Stack physical if you can. Gold bars, silver coins, eagles, maples. Hold them cold storage through the storm. Tangible beats paper every time when trust cracks. Buy the dip smart. Not all at once in panic, FOMO. Dollar cost average in over the next week or two. Small, consistent buys as it stabilizes. That way, you average down without blowing up. Watch the key indicators like a hawk. DXY for dollar moves. Any break below 97 flips bullish. Fed minutes or Powell speak for pivot hints. China data on metals imports and industrial activity. Geopolitical headlines for safe haven sparks. Crypto? If Bitcoin defends 75K, load up. It's the leveraged play on the whole thesis. This hurts, I know. Portfolios torched, confidence rattled, that voice screaming, it's over. But flip the script. This is your forge. The pain tempers you. Survivors of these engineered dips come out unbreakable, positioned for the moonshots. The whales want your fear. Deny it to them. Hold, stack, average in. Because when the storm clears, and it clears fast after capitulation, the rebound will be ferocious. Shorts squeezed to oblivion, new highs shattered, your comeback story written in green. You're not just enduring this, you're built for it. Let's turn this bloodbath into generational wealth. Stay savage, stack harder, the real explosion is coming.